So Aisha, let's look at the geopolitical tensions. I mean, we've seen when the geopolitical tensions, they surfaced up for the first time in 2023, the market reacted to it for a couple of days and then they moved on. So what happens in terms of geopolitics, I think it is an isolation. It is not something which will really have an impact on the financial market per se. That is what recent experience has told us, because it is very localized and it's unlikely to have a very large permanent impact. We are talking about permanent impacts here. So the permanent impact which happened because of Ukraine and Russia was there. But this time around, I think the permanent impact purely in terms of size and financial market advantage or disadvantage may not be there. But I think this China factor is crucial, and it is especially crucial, and our viewers should understand that China has been an underperforming market. It's a market where where foreign institutional investors have invested and the experience has not been very gratifying. This sudden comeback in China, is it a deep swell, or this could be a time when post-Fed cut, this time flows which were expected to come to India, they would actually move into China. If that happens, then this entire assumption that FIIs are back and they are here to stay may just get challenged. But if the China trade becomes more and more pronounced, which is the comeback in China trade, surely it will have an impact on metals, psychologically more rather than based on realistic numbers, and definitely in terms of FII flows, because India has historically competed with China in terms of flows. But if China comes back, let's see what happens. I doubt that this is going to be sustainable. That's my personal view, because China has far deep-rooted problems. We'll talk about it, but those deep-rooted problems are not going to get addressed in a hurry, so to speak.